Today at the National Press Club, three economists tackle the question of tax reform. As the government considers changes to Australia's taxation system, Judith Sloan, John Daly and Peter Whish-Wilson will ask, tax reform, too little or the right time? That's today's National Press Club address.
Ladies and gentlemen, good afternoon. Welcome to the National Press Club and today's Westpac address. Well, sometime later this year, the Abbott government will release a green paper, a discussion paper on tax reform. It's already put out the first of those papers, and it's now moving through with a whole raft of stakeholders to look at what are some of the options that it might put before the Australian people when it goes to an election sometime next year. Tax reform, it's an issue that has bedevilled governments for years. This government has already apparently ruled out tax reform in a number of key areas, GST perhaps being the most notable. Today, at the National Press Club, we're going to have a debate about tax reform, about what has to happen, what our panellists would like to see in that next discussion paper. And we're very pleased to welcome to the National Press Club for this debate today Green Senator Peter Whish-Wilson, who's just about to chalk up 3 years in the federal parliament, of course replacing former Greens leader Bob Brown. John Daly, to my far left. John's been with the Grattan Institute since 2009, and since that time I think it's fair to say he has taken that institute. Certainly it's earned a reputation as one of Australia's leading think tanks. John, before that, worked for McKinsey & Co and has also specialised in tertiary education. And Professor Judith Sloan would be known to many people for regular appearances on Q&A and other ABC programs. Judith, of course, also writes for the Australian newspaper where she is contributing economics editor. Ladies and gentlemen, please welcome our panellists and to open proceedings today, Peter Whish-Wilson.
Thank you. I'd like to start by thanking the National Press Club of Australia for inviting me here today and putting this on. And I'd like to acknowledge my colleague Adam Bant, who's taken over Treasury, who can't be here today. He's expecting his baby, so I'm the ring-in. Last Monday, in Senate estimates, I took the opportunity to ask the Treasury Secretary John Fraser what he thought about the state of housing in Australia. Unlike many, what he said about the risks of a housing bubble didn't surprise the Greens. My party has been taking a keen interest on housing affordability issues for some time. Additionally, ASIC, APRA and the Reserve Bank have all said similar things. But the way Mr Fraser said it, an unequivocal bubble, was certain to gain everyone's attention, and to our party's relief, it is now a subject of much national debate. It immediately led to questions in the House, where Tony Abbott refused to engage in the substance of the debate, simply saying Bill Shorten wants to make your house worth less. And yesterday, Joe Hockey saying to get into the housing market, what you need is a good job that pays well, shows how out of touch this government is with everyday realities. Meanwhile, household debt in Australia is at record levels. For new mortgages, the level of investment housing, itself at a record level, now exceeds owner-occupied. Our household debt to GDP ratios are now the highest in the world. Correspondingly, the level of home ownership is now the lowest since World War II, almost entirely attributable to unsustainable growth in housing prices. It is an undeniable fact that for too many Australians, most of them young or low-income earners, there is a housing affordability crisis in our country. Part of the solution, and I say part of the solution, is with fixing this crisis lies with fixing the tax system. Yet the government refuses to engage in a mature way, constantly ruling out important policy options. So the Greens have led the national parliamentary debate on this issue, launching a fully costed policy this week to phase out the sacred cow of negative gearing. The Greens are looking closely at the taxation of all investment vehicles that push everyday Australians beyond the reach of home ownership. This includes superannuation, self-managed super, family trusts and capital gains discounts also. After 2 decades, negative gearing has proven itself to be a failed and costly policy. Rents in Australia have almost tripled in the past 15 years and are amongst the highest in the developed world. And in recent times, the growth in the price of rents has outstripped the growth in the price of owner-occupied housing. New data out yesterday shows investment housing is now higher than owner-occupied housing and is no longer predominantly funding new housing. So supply has not kept up with demand, and our estimates are that there's currently a gap of more than 500,000 affordable rental properties in our so-called lucky country. Unlike the government, we take housing affordability seriously, and unlike the government, we take open and frank debate about tax reform seriously. The Greens have strong views on the role of government in our lives, and we believe that a good tax system, or what a good tax system should achieve, is pretty simple. Governments play a key role in the provision of public goods, services and infrastructure, such as public transport, healthcare and education, in creating a fair and equitable distribution of income, in fostering innovation, and in correcting the market failure associated with damaging externalities such as carbon emissions, health risks and financial market volatility. The Greens have taken the strongest possible stance on busting Mr Hockey's first cruel budget, with its sole focus on spending cuts, attacking the unemployed, the poor, the sick and aged Australians. Along with many other stakeholders, we've been highlighting that if any budget crisis does exist, it is a revenue and equity crisis in this country, not a spending or efficiency crisis. I don't know, Judith may disagree with me on that. The Greens want to be the political party leading the national debate on raising revenue and other long-term tax reform. Another recent example is our policy on reforming superannuation tax concessions. We've been the strongest possible advocates, on the other hand, for a small business package, with a 2013 election promise on tax cuts, a 2% corporate tax cut, instant asset write-offs and loss carryback provisions. We've also been the party most prepared to tackle the big end of town and stand up to the special interests that so often influence our political processes, highlighting the need to remove corporate welfare and have big companies pay their fair share of tax. An example of this is the recent high-profile Senate inquiry into multinational tax avoidance instituted by Senator Christine Milne. So this country needs frank and fearless debate on tax reform. The government offers its white paper as this once-in-a-generation opportunity, but as I've personally recently found out at Senate estimates, they're already ruling out some of the critical reforms we need debated. Now, GST was just mentioned, but they've also ruled out changes to superannuation tax concessions, negative gearing and, of course, carbon pricing, a new mining tax and fringe benefit rorts. So whilst the government is shutting down comprehensive political tax debate through its white paper process, I hope that today's conversation with Judith and John opens up new possibilities for the nation to consider. Thank you.
Thank you, Senator. Now I'll turn to John Daly. John.
Thank you. When I was young and didn't know any better, I thought that tax reform was tedious, trivial and tough. I now know a little better. Tax reform is in fact not tedious. It is actually quite fascinating as soon as you get into the detail. The issues are essentially those about fairness, about government revenues, about how it affects economic activity, some of the most important public policy questions that we have. And for those very reasons, it's also not trivial. It goes to the most fundamental things in our democracy and how our country is run. It's probably the biggest single lever that we have around economic reform. It's invariably one of the biggest single levers around social fairness. And it's invariably, of course, one half of the entire equation about whether we have enough money to do all of the things that we would like government to do. The one thing, though, that is true is that tax reform is tough. Invariably, it involves some people paying more tax somewhere along the line, and few people like paying taxes very much. And because it's tough and rarely politically popular, it is very important that we prioritise tax reform. Choose to spend scarce political capital, because political capital is always scarce, on those tax reforms that will make the most difference. So when we're looking at tax reform, what are the key problems that we should be trying to solve in Australia in 2015. I'd suggest that there are two problems that ought to be at the top of the list. Firstly, we have government budgets which are in deficit in the Commonwealth's case and under severe pressure in the case of the states and territories. Commonwealth has been running a budget deficit of about 2 to 3% of GDP for the last 6 years in a row. On current estimates, it will continue to run deficits for the next 4 years, and that's assuming the forecasts are right, and the Commonwealth needs to be a great deal luckier than it's been in the past to even hit those forecasts. It has a considerable and significant budget problem. When you are running a deficit of $40 billion a year, as the Commonwealth has been, implicitly you are saying to younger households that they will pay an extra $10,000 each in tax at some stage over their lives. If you've been doing it for 5 years in a row, you're implicitly saying to those younger households, who of course are going to be paying tax for longer, that they will be paying an extra $50,000 a household at some stage over their lives. So we have a significant budgetary problem, and given the scale of it, it is very unlikely that we are going to be able to solve it simply by cutting expenditure. I would be the first to agree with Judith that some expenditures need to be cut. Where we may differ is that I think we will also need to see some taxes go up. And then the second major issue we have is that tax reform is a big lever in terms of improving our economic efficiency. Some taxes impose much higher costs in terms of compliance, in terms of how they shape people's activity, so they wind up producing or working less than they might otherwise. Some taxes deter assets being owned by the person who will make the most use of them. All of these reasons mean that tax reform to improve economic efficiency is a priority. Other things are worth doing, like reducing compliance costs, increasing fairness and so on, but I would suggest that those things are probably second order relative to those two big issues around fixing our government budgets and improving efficiency. What kind of things pop out if you are prioritising on those lines? I'd suggest a couple of taxes appear to be the most important candidates for reform. Firstly, in terms of improving budget balances, serious reform to superannuation tax concessions, significant reform to capital gains tax are some of the most likely candidates in that they both can substantially increase revenues without doing too much damage to all of the other things that we care about, particularly economic growth and fairness. And on the efficiency side, although we spend a lot of time talking about the problems of corporate tax and the problems of income tax and the way that GST is probably more efficient than those, and there's certainly something to that, probably the largest and most important efficiency gain is around how we tax property. At the moment, primarily through stamp duties, which essentially deter transactions, instead of having broad-based property taxes, which are about the most efficient tax base anyone's ever come up with. Now, all three of those changes I've just mentioned will be politically difficult, but I'd suggest if we are going to prioritise, let's prioritise the things where we get the most impact in terms of repairing our budgets or improving economic efficiency, and try to avoid getting distracted by things that will, in the end, be relatively less important, have relatively little impact on the things that matter most. Thank you.
Thanks, John. And now with her opening remarks, Judith Sloan. Judith.
Thanks very much, Steve. Now, Steve tells me he'd like a bit of biff from me, which I thought was quite unkind of you, Steve, by the way. But in fact, I thought I'd start on a slightly different tack, because I think if we are having a debate, it's nice to think that there are some issues on which we, three of us and members here today, including the press gallery, can be on the same page. So I'm hoping for a few nods, you know, a bit like those political interviews from my colleagues on my left and right. So I think the first thing I want to get us to agree on is that the principles that should drive the design of the tax system are efficiency, equity and simplicity. I'm hearing a bit of, I think a bit of nods. Okay, so the aim is to raise the required revenue to fund, and I would say, efficient government spending while doing the least economic harm and still meeting the fairness test. So I think probably people can agree at that high level. The second one, which I think is not quite so widely acknowledged, but that is that the fairness of the tax system should be judged as a whole. It should not be judged by looking at its component parts necessarily. The GST would always fail a fairness test if you were looking at that. But if we look at the tax system as a whole, we have to ask ourselves, does it fit a fair definition? And I think about income tax, which is 50% of all Commonwealth tax revenue. And I know a lot of you will know these figures, but that the top 1% pay 20%. So the top 1% pay 20% of all the income tax revenue, and the top 10% pay nearly a half. And another thing here is that a decade ago, the top 10% paid only a third. So in fact, the income tax system has become much more progressive. So in many ways, it would be actually fitting your fairness test, Peter, more than it was in the past. So I'm getting a few nods here, I think. The third thing, and I think, John, you were onto this in a way, is that the arguments about changing taxes to raise more revenue are actually distinct from the arguments about changing the tax mix. Now, if you're going to change the tax mix, which was essentially what the introduction of the GST was all about, there was massive compensation for the losers. So I think if you think about the political economy of that, it's much easier to change the tax mix than it is to change taxes in a way that it raises a whole lot more revenue. And because if you're going to raise a whole lot more revenue, you can't be handing out dollops of compensation. So I think when we're thinking about this debate, we have to think, are we arguing about a change in the tax mix, or are we arguing about increasing taxes to raise more revenue? My fourth point, and I think the nods might become a little indistinct at this point, but there is a solid principle that you should tax annual income, be it company tax or individual income tax, in a different way to taxing savings, investments and capital gains. Now, I think you probably, John, do agree with me. I mean, I think the extent to which you think that there should be differences in the way annual taxable income is taxed compared with savings, investment and capital gains, I think we differ a lot. But I think there is a principle there that you would not want to. You want to encourage savings, you want to encourage investments, you do not want to have a debilitating form of capital gains tax which dissuades capital accumulation. So the way you think about how you tax different economic activities has to take that into account. The final point I would make is that, and this is a well-known principle in economics, that by and large an old tax is a good tax. Now, why do I say that? Basically, the compliance costs are sunk in the case of an old tax. The behavioural adjustments have occurred. So the important point about that, and which is why I don't actually expect there to be much activity coming out of the green papers and the white papers and all those submissions and the like, is that the strong default position should in fact be to leave taxes and associated regulations well enough alone. There has to be a very, very strong case for mucking around with the tax system too much on the basis of the principle that an old tax is a good tax. Thanks very much, Steve.
Thanks, Judith. Thanks to all our speakers for those opening remarks. We'll now move to questions. I might ask the first question. Well, Judith Sloan says our tax system is more progressive. Peter Whish-Wilson and John Daly, I might get you to respond to that. Do the Greens believe that our tax system is becoming more progressive? And if so, why do we need to change it?
Look, we feel it could still be more progressive. Discounts on superannuation tax concessions are an example of a debate we're having at the moment. We've put up a policy where we still want to offer a discount for contributions to super, but at the moment, set at 15%. They're disproportionately significant for high-income earners, and we feel that we've always had issues with the GST on the basis that it's not a progressive tax and it taxes the poorer people harder than it does high-income earners. So there's always more room for a progressive tax system.
John Daly, do we have a more progressive tax system now than we did, say, 15, 20 years ago?
For most people, in most categories, it's more progressive than it was. I think the issue is whether it is appropriately progressive for some categories. And in particular, we've wound up with a superannuation tax system, which means that for those people who are over 60 and have a competent financial planner, they wind up paying far less tax than would be suggested by the progressiveness of the Income Tax Assessment Act. So although our income tax looks very progressive, and indeed is, as Judith pointed out, for those particularly who are over 60, they wind up paying far less tax than you might expect given those marginal tax rates. I think that's the major place where there is a leak in our income tax system and our tax system more generally, and that I think is the biggest opportunity. Indeed, those tax concessions have become so large that a very large number of people have started to put their head over the parapet and said it's got a bit out of hand. And that includes the government's own Commission of Audit, the Financial Services Inquiry, the Secretary to the Treasury, obviously a number of people from other backgrounds, but there are now indeed the superannuation industry itself suggesting that those things have probably got out of hand.
Judith?
Well, in observing that the tax system has become more progressive, I'd like to actually point out what I think is actually a big design fault of the system. So, okay, essentially there was a fork in the road and Australia has gone down one path. So we have a very high tax-free threshold and then we have a very steep income tax curve. So we have high marginal tax rates. All right, so that's one model. And that's creating real problems at the moment because we have what is called bracket creep, although I prefer to call it fiscal drag because isn't that a great term? So basically what's happening is that in fact it's not so much high income earners because they're right up the top. It's the lower middle income earners who are being pushed not just into the next top bracket, but they're being pushed into higher average tax takes. And that I think is one of the big issues for debate here. The other fork in the road is the New Zealand model. So the New Zealand model, they don't have a tax-free threshold. So the principle there is that everyone benefits from public goods, and Peter would agree with me on that, and that therefore everyone should make a contribution even if it's very small. And so everyone pays tax from the get-go, and then what happens is that they have a very flat curve, and the top marginal tax rate there is 33%, right? Our top marginal tax rate is 49%. That's as high as it's been since 1988, I think. And bear in mind, it actually kicks in at just over twice average weekly earnings. So we've gone, the Himalayas. The other way would have been to go the foothills. And I actually would much prefer the foothills, but I think that might be a radical step too far to take.
The next question is from Joe Kelly.
Joe Kelly with The Australian. Just a broad question to start with. This budget's been noted for being softer this year than last on the issue of structural reform, but savings are still going to struggle to get through the Senate, and obviously there's a heavy reliance on bracket creep or fiscal drag. Do you think there needs to be more bipartisanship in tackling this reform? Do you think Labor and the Greens have done enough in extending the hand of bipartisanship to tackle that issue? And could I also just ask what you think the preconditions are to actually provide some relief from bracket creep?
Peter, do you want to respond to that? Has Joe Hockey invited you to meet with him to discuss the budget?
Not me personally, no, but certainly we are having a number of discussions with the government on different sets of legislation coming to the Senate. I believe we were right to take a very strong opposition to the first budget. We, as a party room, got together and most of the policies that have been put up were the antithesis of what our party stood for. And the important context of that is we felt that, as I said in my speech, there's not enough focus on the revenue side. If we actually want to look at long-term structural tax reform, we have to make some brave decisions. Politically, some of them are going to be difficult, but we wanted to see this debate to the messaging also around the initial budget. Was very much that we were in some sort of crisis. Now, of course, that changed very quickly. The government backpedalled on that over 2 or 3 months, but the idea that somehow we were in this huge national debt crisis and it was going to get worse was something that we didn't necessarily buy into that either. So, yeah, we took a tough stance, and I think now if the government's prepared to consider proper structural reform and make the tax system fairer, then that's something we would support.
Judith?
I mean, the interesting thing is that if you look at the budget papers, and I'm not saying I necessarily believe the projections, but it doesn't look as though there is a revenue problem. So, they're expecting an additional $88 billion in revenue over the forward estimates. And the proportion of government receipts, the proportion of GDP is going to go from 24% to 25.2%.
Isn't that revenue from bracket creep?
Well, okay. So, I mean, if you believe those figures, they don't have a revenue problem. I mean, they're quite close to budget balance by the end of the period. But there are 2 points. First of all, I'm not actually sure I believe the projections. And secondly, about 80% of those revenue gains are through bracket creep. So that comes back to your question, Joe. I mean, the truth of the matter is that in a practical sense, I can't see them doing anything about bracket creep at all, because the revenue growth is so reliant on basically people's average tax rates being pushed up. And that's why I think I'm happy to have a debate about the tax mix issue, but, you know, I'm much less keen to have a debate about we need more revenue because, you know, we've got these unspecified expenditure aspirations. You know, we need to actually have both. We need to think about how we can have a much more disciplined attitude to government spending, where we are only spending on items where there are high net social benefits, and a lot of stuff can get dropped off. And we also need to have that debate about the tax mix.
John Daly, no revenue problem.
Well, there's certainly a budgetary problem. If you've been running a deficit of, you know, in the order of $40 billion for the last 5 years, you'd have to say there was something of a problem somewhere. Judith's absolutely right that on the government's projections, and like you, Judith, I'm not at all sure I believe them, a lot of things need to go right for those to come off. On those projections, essentially, the budget will more or less return to surplus, and primarily as a result of taxes not actually changing their rates or anything, but collecting substantially more as a percentage of GDP. Now, one, like you, I'm not sure I believe that. Two, I would suggest if you are going to solve your budgetary problems through revenue increases, and that is very clearly the government's strategy, that's what the budget papers say, then I would suggest there are better taxes to raise than the implicit increase in income tax through bracket creep. That bracket creep, as Judith points out, winds up increasing marginal rates of tax and therefore reducing take-home pay for middle-income earners. It's a particular issue for second-income earners who are only working 2 or 3 days a week. The combination of our tax system and our welfare system means that many of those people face very low rates of take-home pay if they work 4 days instead of 3 days. Bracket creep, or as Judith points out more accurately, fiscal drag, makes that problem even worse. And consequently, if we are going to solve our budgetary problems by increasing taxes, and that is the plan, there are better taxes to raise than simply relying on fiscal drag to do the work.
Next question is from Gareth Hutchins.
Hi, Gareth Hutchins from the Sydney Morning Herald and the Age newspapers. Regarding Joe Hockey's comment yesterday on housing affordability and his advice that people ought to get better jobs if they want to be able to afford a house, with your understanding of the economy and the labour market at the moment, how realistic do you think that advice is?
John?
Well, we need to understand what it is that's driving housing affordability. Firstly, this is clearly a social-wide trend. On the numbers, we are seeing housing ownership rates for not only 25 to 34-year-olds, but also 35 to 44-year-olds falling steadily and quite rapidly. So that's problem number one. It's not just that there's one or two 25-year-olds sitting on the couch and not saving. We're seeing home ownership rates fall amongst pretty much everybody aged under the age of 60 in Australia. Secondly, we're seeing those rates fall fastest for those who are on low incomes. And thirdly, we're seeing a big divide opening up in our cities between those who live in the CBDs and the kind of 10Ks around them, by and large on high incomes, high levels of education and very good access to jobs, because most of the jobs that are being created in our economy are being created in that 10 kilometres around our CBD, in our big 5 capital cities. And on the other hand, the edges of our cities, more than 20 kilometres from the CBD, which is where most of the housing is being created, and yet very few of the jobs are being created there. And that mismatch between where jobs are created and where housing is created is a real problem. What's driving this, and this is where I would agree with the Treasurer, is in part significant issues around our planning system. It's got nothing to do with tax, it's got everything to do with planning. And if you make it very difficult to subdivide anything in that middle ring, anything up to 10 or 15 kilometres away from the CBD, then you make housing within that area very expensive. But we also have tax policies like negative gearing which are making the problem worse, and it is difficult to see that they're serving much social purpose. Restricting negative gearing or reducing capital gains discount will probably make housing a bit more affordable at the margins, but it's not going to solve the problem.
Judith Sloan, would getting rid of negative gearing help Australia's housing crisis?
Can I just point out that I actually don't think Joe Hockey was giving anyone advice. He was actually stating the bleeding obvious, to tell you the truth, that if you want to buy a house in Sydney, you have to have a reasonably well-paid job. But leaving that aside, I mean, I'd like to pick up on a point that John just made. I mean, I live in a suburb where the residents formed a group which said residents against inappropriate development. And everyone had that stuck in their front garden. I liked that inappropriate development, didn't you? So basically, anyone, you know, there's a tremendous resistance to any kind of infill development in the suburbs where people want to live. Okay, in terms of negative gearing, and particularly, negative gearing has been on the books since 1915. Negative gearing has not changed. Okay, housing affordability has changed. Now, for anyone who's done economics, this does not look like a good correlation, does it, right? The capital gains tax change came in 2000, okay, 15 years ago. It has not changed. Housing affordability has changed. Go and look elsewhere, would be my advice.
Peter?
Yeah, I'd agree with Judith on that point. That's why I was very clear to say there's no silver bullet on this, and capital gains tax is something we need to look at. Look, Joe Hockey could have said so many other things that would have addressed the issue. I think what he said was demonstrating how out of touch he is with a lot of Australians. He's ignoring the fact that there's a distortion in the tax system that allows effectively the most wealthy in this country to benefit from tax subsidies that are being paid by the least wealthy in this country. Because that's effectively what's happening under negative gearing and through capital gains taxes. Those poorer people in this country are ending up subsidising rich investors. Nearly 35% of houses now are in the investment market. So whilst Joe Hockey might be right that you need a job to have a good house, at the end of the day, more than a third of the houses being purchased in this country are being purchased for capital gain by investors, not for long-term owner occupied. So I think at the end of the day, you can throw on top of that, Gareth, that we don't have job security anymore like we used to have when I was growing up. Owning a home was the dream of most Australians, and my parents bought a house and that was their investment for all of us. But my dad pretty much had a job for life. He was a company man until he got retired. It's very hard to find that in this day and age, and this is a long-term investment for most people. And of course their job security is a really serious issue for them. You have to fight real hard for your working conditions in this country. So I think in the bigger picture, most Australians are in that battling position, and to come out and say that was very insensitive.
Next question is from Joe Mather.
Hi, Joanna Mather from the Australian Financial Review. Does the tax system not sort of make home ownership the be-all and end-all? Shouldn't we be looking at sort of, is that the best way to go?
I think that's a really good question. And I mean, I think we have to be a bit careful because, you know, when Peter Martin and I were young, you know, we went through our university careers quite quickly. Yeah, we're still young. And, you know, we were out in the workforce when we were 21. If we look at the patterns of younger people now maybe it's not entirely voluntarily, but a lot of them haven't really established some sort of permanent hold in the labour market until they're in their late 20s. So we have to kind of think about the figures in that context, right? I mean, there are different models around the world, you know. I mean, I actually think the private rental market is pretty appalling in most places, right? But we might want to think about how you do that. I mean, in plenty of European cities, people live in rental accommodation for years and decades. They renovate it and the like. You know, maybe younger people don't necessarily hold by the values that home ownership involves, like, you know, mowing the lawn on the weekend and getting out the vacuum cleaner. You know? So I think us oldies have to be a bit careful about imposing a value system that may be changing. Now, that value system may be changing because they feel locked out of the real estate market, and I do worry about that. But we also have to think that, you know, it's actually quite a complicated story, and we have to kind of, and as indeed housing affordability is, because, you know, there are plenty of parts of Australia where housing is actually quite affordable. It's just that there aren't any jobs, right? So I think that idea of thinking about housing affordability in the labour market and how the planners might try and get that going in a more complementary way is also an interesting policy issue.
John Daly?
I think we should be careful to assume that young people don't want to own homes. Indeed, if you look at surveys, they show that aspirations for home ownership are as high as they've ever been. If you look at savings rates amongst younger households, they are as high, in fact, they're substantially higher than they were a decade ago. So although there's this meme that there's lots of young people out there, you know, busy living on their parents' couches and, you know, spending every dollar they earn, actually, when you look at the averages, it's very clear that young people are, to the extent that they are living on their parents' couches, saving as hard as they can, and there is certainly a desire for home ownership. You are absolutely right in your question, or its implication, that our tax system massively privileges home ownership. It does so in terms of saying that home ownership, you pay no capital gains tax on the home, and it also privileges housing investment. As Judith pointed out, we changed the capital gains tax rules in 2000. That is actually the precise point at which the proportion of houses that are owned by investors rather than occupants started to change. And why did it change? Because all of a sudden I could own something as an investor, I could claim the interest at my marginal rate of tax, but then I would only pay tax, in effect, on half of the capital gain. And it's a terrific lurk for those people who have got enough capital that they can start to play that game. It's the mismatch between the capital gains tax rate and marginal rates of income tax that makes negative gearing such an attractive tax strategy.
It was part of the marginal tax rate, though, John. It was always paid at the marginal tax rate.
You had a slightly different system. But I note that most countries around the world do not allow that system to continue, and they, in effect, quarantine earnings from income from whatever losses you might make on investment. I think that that's the issue. We are seeing continued shift in the housing market away from owner-occupiers towards owner-investors, and the tax system is, if anything, accelerating that shift. And it's unclear to me why we would want a tax system that does that.
But it hasn't changed the tax system.
It changed in 2000 and took up immediately.
15 years ago.
Peter?
Look, I think you can answer this. We're economists. You can answer this in economic terms, and you can put all sorts of value judgments on this. And I think that's sometimes where it's hard to put up legislation or policy prescriptions. I think for younger people, it's good to have a home. It's good to have that community. It gives them stability. But more importantly, it does make sense. When you look at it, why pay off someone else's investment by paying exorbitant rents, which is what they're paying now, when you could actually be funneling that into your own investment and setting up your nest egg? So in a way, it's a forced a forced retirement system, but in terms of forcing people to save. So, yeah, I'd like to keep it the way it is.
Treasurer says your policy would force up the price of rents if you got rid of negative gearing. Do you? How do you respond to that?
Yeah, look, there's no evidence that that is the case at all. In fact, it's quite to the contrary. When this issue was dealt with politically last time, and obviously there's people in this country who were there and participated in this, prices did go up when negative gearing was removed in Sydney and Perth, but that was very little to do with negative gearing. The rest of the country... I've had a look at the numbers, Judith. There was all sorts of existing pent-up demand issues in Perth and Sydney, but outside of that, prices didn't change at all. Around the Henry tax review, these issues were modelled, and in fact, it showed that a moderate change to negative gearing would actually significantly reduce rental prices in this country. The other thing I would say is quite simply, under the system where we've had negative gearing, our rents have nearly tripled. They're the most expensive in the world. So, I mean, we have to look at the context of this and say something's not working and we need to fix it.
Our next question is from a young Peter Martin.
Can I ask about something you might agree on? We'll see. And it's what John identifies as the biggest issue in tax. It's that people who are over 60 don't pay tax on their super payout. Now, that's arguably okay, but they also don't pay tax on the earnings that bring that about. So the earnings in super funds, right up until you're 60, they're taxed. You have the situation where someone can be earning $100,000 a year in super and pay no tax, whereas their neighbour can be working, earning $80,000, $70,000 a year and paying the top rate of tax. Can we agree, can you agree, that that system, which came about as a bit of an accident, really. I think the Treasurer didn't quite intend the consequences he did and certainly couldn't have foreseen what would happen. Can we at least agree that that system needs to change so that retirees pay tax in the same way as their neighbours who are yet to retire and are still working?
No. No. Oh. No, definitely not. I mean, it comes back to the principle. At the same rate as you are, Peter. Look, I think, you have to go back to that principle that the way you tax annual income and the way you tax savings are different, right? Now, in most countries, actually, they don't either... and OK, there are different institutional arrangements between countries. They don't tax contributions, they don't tax earnings, and they tax the pension, the retirement incomes at full tax rate. I'd be happy with that, right? But how do you get from where we are, where we tax contributions and we tax earnings?
Well, not in this case.
No, the thing is, it's impossible to get from A to B, really. It really is. You think about it, if we move to that situation, apart from the grandfathering that would have to go on, there would be a tremendous short-term loss of revenue because there would be no tax on contributions, no tax on earnings, but full tax on retirement, where your neighbours are, treated the same way, Pete, you see. So we have to provide an encouragement for people to save, and not just for people to save, to have people have their money locked up for decades and decades and decades. So you cannot tax that as annual income, right? So I think, it might be second best where we are. It's the bad tax, but I basically think we've just got to go with it. The average effective taxation on superannuation is about 40%. And now with the fiddles that Wayne Swan made, for high income earners it's even higher. So it's not great. I'd leave it.
John.
Can I suggest we need to pull apart here what are the incentives and what are behaviours. If you look around the world, and the OECD has done a very nice piece of work on this, looking at the impact of taxes on savings, there's some very obvious patterns that drop out. One is taxation rates on savings of those on middle incomes does make a difference. For people on middle incomes, they make a real trade-off between what do I spend today versus how much might I save for tomorrow. Ironically, none of what we're fighting about is about that. The superannuation system for people in the middle essentially forces them to save. They've got very little discretion. and the taxes on those savings, whether 0 or 15% once they hit 60, are not that big a deal. On the other hand, that international evidence also shows that savings rates for those who have higher incomes and more wealth is actually relatively insensitive to tax rates. Why is that? Because if you think about a high-income family in Australia on $150,000 a year, they are not planning to retire onto the age pension of $30,000 a year. They are always going to save for their own retirement. And the only question is, how much do we give up in tax concessions through superannuation on the way through? Because their behaviour is not going to change that much. Now, their behaviour will change as to which vehicle they save in. And, of course, when we say you can essentially save more or less out of your pre-tax earnings, then pay only 15% tax on the earnings on those savings rather than your marginal tax rate, and then you pay no tax at all on the earnings once you hit 60, that's a very attractive tax vehicle. Anything else that looks like that, the ATO turns up on your doorstep and asks very awkward questions.
But it isn't actually that attractive when you think about it, because A, it's compulsory, right? So those OECD estimates are irrelevant because they're all about voluntary decisions. I mean, you are compelled to put your money into your 9.5%, and if, I guess, the Greens have their way, but if Labor have their way, it goes to 12%.
That's not true, Judith. You are only compelled to put in up to $20,000 of your own money, depending on your income.
And you look at what's happened to voluntary contributions. They've come down because people don't want to have their money locked up in an investment vehicle which is subject to such incredible regulatory uncertainty. And, I mean, my accountants tell me this, that whenever people like Peter and John and Labor and the like start talking about superannuation, they get calls saying, I must get my money out of superannuation, I don't want to invest in superannuation. What about a negatively geared house? We have to look at the facts here. Who puts in voluntary contributions to superannuation? And the answer you can now see from the ATO tax stats is overwhelmingly the old and rich. Now, why are we giving the old and rich a very substantial additional tax incentive to save when they're going to save anyway? Well, it's not the old, because once you've retired, you can't be making concessional contributions, so that's not quite right. But yes, the point is that we can't. You know, and I mean, we have these, for example, compulsory drawdown arrangements. It is incredibly complicated, the superannuation system. And I guess my message would be is that you start tinkering with the superannuation system at your peril, because people lose confidence in it and people think, I'm not going to put it, to the extent that I'm not compelled, they obviously will put that money in through compulsion, I'm not going to be risking my money in that. And from the society's point of view, that is not a good thing, because this is a saving stroke investment vehicle. We're going to move on. Next question is from Michael Keating.
Michael Keating from Keating Media. I'd like to direct my question to the whole panel, but particularly Senator Wilson as the only legislator here. If you impose a tax on high net wealth individuals that are negative gearing through property, won't they just switch to property trusts and other financial instruments that won't be affected by any of these proposed changes? In which case, the only people that you will affect are the working middle class who are just trying to save for their retirement.
Yeah, Senator. Look, it's a really good question. Just firstly, a technical point: we're not increasing taxes; we're removing a concession. I think that's something in the bigger debate today that we haven't really discussed. We can always talk about increasing taxes, and it sounds like a terrible. It sounds like a terrible message. But actually, what we're removing is subsidies, which has a different frame around it. I would, as I said in my opening speech, the Greens are going to look at any investment vehicle that pushes average Australians out of the housing affordability bracket, including discretionary trusts. So this is something we'll be onto, and I can say here today, watch this space. This is something we're very focused on. I mean, it's a very good point you're making. So what happens in other countries where they do that quarantining, for example, which is sort of going the rounds now,
is that if you're wealthy enough, you either establish a unit trust or you incorporate, because, I mean, no one is saying that a business cannot deduct off the costs involved in doing business and earning an income, right? Now, the trouble with that is that who are the people more likely to incorporate? They, of course, you know, are the wealthier people, the more sophisticated people. Whereas if you go and look at the 1.2 million people who have investment properties, there are a lot of middle-income people. They're nurses and they're doctors and they're, well, maybe the doctors, they're probably well paid.
They're a much smaller percentage.
Public servants, there's a huge concentration of investment property ownership here in Canberra. You know, the Fireys, the Ambos and the like. So those are people who, you know, they may only have one property. Incorporation probably looks a bit too difficult and costly. So you could actually end up with a more unfair system by going down this route than the one we currently have.
Could I say they're all going to be equally impacted if we have a burst in the housing bubble? Doesn't matter who you are.
John Daly, what sort of negative gearing system would you like to see? I mean, could you limit, for instance, people to, say, having one investment property? I heard a week or so ago someone in Sydney who sounded pretty young, I've got to say, on radio, talking about having 9 investment properties. You know, is there some sort of model that you'd like to see other than just abolishing negative gearing?
I think that's a very complicated way of doing it in terms of looking at trying to restrict people to a certain number of properties, and it also creates enormous distortions, even more distortions in the ownership market. I'd much rather see a system that, firstly, looked at reducing the capital gains tax discount, which in itself then goes to reducing the incentives for negative gearing, or if you're not prepared to do that, that essentially quarantines wage and salary income and says you can do whatever you like in terms of taking your deductions against other investments, but you can't take that away from your wage and salary income. And of course you can accumulate the losses and then claim them at the point that you make a capital gain. To the point question that was originally raised, which is around switching, won't people switch? Well, of course they may well switch their investments to something else, but by definition they will pay more tax than they are today, because if they could pay less tax by moving to those arrangements now, they would have done that already. So by definition we'll collect more than we do. And then thirdly, in terms of the material that Judith was talking about, in terms of the impact on Middle Australia. The bottom line is that well over half of the value of the negative gearing tax concessions go to the less than the top 20% of taxpayers. Yes, of course, there are some middle income earners who are negatively gearing, but if what we are trying to do is help the nurses and fireys and police and middle income earners of Australia, there are much more efficient and equitable ways of doing this than maintaining negative gearing. We would be far better off to change the rules on negative gearing and use the money that we raised to reduce marginal income tax rates for those middle incomes. If that's what you're trying to do, that would be an efficient way of doing it. If you are instead trying to reduce tax for those middle income groups, but at the same time giving most of the benefit to higher incomes, what we have is a small tail wagging a very big dog.
Our next question is from Sophie Morris.
The housing affordability discussion is fascinating, but let me take you to a tax that's likely to come before Parliament in coming months. The increase, or the restoration of indexation on the fuel excise needs to be passed by Parliament by, I think, September or October. There's a great deal of interest, Senator Whish-Wilson, in what your party might be considering doing on that. I'd like to hear all of your views on the merit or otherwise of legislating to formalise that tax increase, which has in fact already occurred.
Peter?
Thank you.
Will you support the government?
Well, politics is a cruel game. We've spent 10 years crusading to get a price on carbon. It was a revolutionary package, huge structural reform. It's been ripped up by this government, and then I suppose to have this frame thrown at you that somehow you don't want to price pollution because you won't support a tax on petrol. It's a bit cruel, but to deal with the issue, we have been really clear about this, that if we believe, as a party with very strong values around the environment, if we believe that it's going to be good for the environment, then we'll support it. And putting a small tax on petrol we see as being a revenue-raising exercise. When we did have discussions with with the government at the last budget about behavioural change and redirecting that income into activities such as public transport or bicycle infrastructure, they said no, it was going to go to road building. which is counterproductive from our point of view. So if they're prepared to talk to us about that, then that's something that we're considering. And I understand that Senator Zenatali has been having discussions with the government, and we'll see where it goes.
So what would you rate the prospects, as we speak today, of the Greens supporting the restoration of fuel indexation?
It's very hard for me to rate the prospects. I'm not involved in the negotiations myself.
But you're the finance
we have discussed
spokesperson.
it. I'm the new finance spokesperson. We have discussed it in party room, and it really comes down to whether the government are going to make any concessions. So actually, you probably should be asking the question to them.
Okay, John Daly, do you think the Greens should support the restoration of fuel indexation, even if the money goes to building new highways?
Well, it's certainly a good principle of tax design that taxes go up at least in line with GDP, and indexing fuel taxation essentially just does that. It says that whatever we're collecting today, we're going to collect tomorrow in real terms. That's good design. And on top of that, as soon as you take into account climate concerns, fuel tax is in essence a Pigovian tax. It discourages behaviour that we want to discourage, namely creation of carbon emissions, and therefore it's a good tax. In terms of the link,
affect people's behaviour, though?
it will affect people's behaviour at the margin. The interesting thing is it affects people's behaviour a lot. Once it gets, there's a break point at about $1.45, and that's because a full tank of petrol suddenly costs you more than $100. And certainly historically, when a full tank of petrol cost you just more than $100, you actually did see quite a substantial change in behaviour. Up until that point, it doesn't change behaviour that much.
Judith Sloan?
I'm not. I mean, you wouldn't expect me to be in favour of this kind of lazy policy. I mean, it seems to me that why don't we index all sorts of other things? Why don't we index the income tax brackets, for example? So, the idea that there's something, sacrosanct about indexing petrol excise is silly. It just was a very easy way for governments to raise more revenue, to tell you the truth. Howard probably, regretted getting rid of it, but I must admit there was a stench of hypocrisy when the Greens blocked its reintroduction.
Next question from Roger Hausman.
Roger Hausman for Inside Canberra. Now, I'm always amazed how much energy goes into tinkering with the Australian tax system, and having seen a printout thereof, it's no wonder. It's a little bit like having a 70s mansion in somewhere the eastern suburbs of Sydney, which probably is ready to be bulldozed, but because it has a heritage listing, people keep adding substandard dwellings. Now, my question is, why can't we start from scratch and use actually modern technology in terms of looking at where government needs to deliver benefits and where the money is actually made and how that money can be taxed fairly so people are happy to actually pay their taxes?
John Daly, better, simpler, fairer.
Well, yes, although I'm not sure that clean sheet redesign is going to be the way to go. This is a place where Judith and I probably do agree, which is that inevitably in this area change is gradual. If you try and redesign an entire exercise from scratch, then the compliance costs of getting from here to there are very, very high. In an ideal world, would we look at changes at the margin that make it simpler and fairer? Yes, of course we would. But I suspect that a clean sheet redesign is not on the government's mind and probably shouldn't be.
So can I just ask you one little question in that respect? Why can you do it with a building but not with a tax system?
Well, a building affects a small number of people's behaviour. A taxation system affects the behaviour of essentially everybody in a country.
I mean, I think we've had some interesting examples in some of, like they say that Estonia, for example, has built a new tax system, but they have been able to build it from the ground up. There are lots of things in theory, like cash flow taxes. They probably look really nice. The Labor government had a working party looking at what's called accounting for contributed equity, which was a form of taxation which creates a more even-handed treatment of equity and debt. The argument for it was quite strong, but the trouble is you could not get from A to B, right, because people's capital management structures have been based on the current arrangements, and to get to B it was basically impossible. So I think tax reform is really about the art of the possible, and at this point in time that's looking very small. It's probably the Prime Minister ringing. it's also about the politics of it. And as I think, again, I agree with you, John, you use a lot of capital, political capital, in making just one change. And so it's not surprising that politicians steer clear of this stuff.
I'm going to start with the Queensland.
Look, just quickly, I mean, if Judith is right that taxation reform is about the art of the possible, then it is disappointing that this government has ruled out so many potential policy options and policy prescriptions such as negative gearing. It's not something I've considered before, but I would say that perhaps taking on some of the sacred cows like capital gains tax and negative gearing might be a good first sledgehammer blow into the building.
And I might ask the final question today. While we've been speaking, the Treasurer has tweeted, mightily impressed with the calibre of debate at Press Club. If only I had that level of advice from the Treasury. I'm going to that'll get me in trouble, or him. I'm going to ask each of the panellists to give me one idea to take forward to the taxation white paper. John Daly, one idea to put forward for tax reform.
I think the place I would start, as the Commonwealth, I would start with superannuation tax concessions. I note that really the only person supporting the current arrangements other than Judith is the Prime Minister in what appears to have been a captain's pick. And given the track record of captain's picks so far, that gives me a great deal of cause for hope.
Judith Sloan, Treasurer wants one idea from you.
Well, I'd like for them to look over the ditch and to think about whether we would be better served with a New Zealand model which has no tax-free threshold but has a very low slope to the income tax, so we can have a much lower marginal tax rate. That would be my nirvana.
As long as we can take half a dozen All Blacks, why not? Peter Wish-Wilson.
Thinking of the art of the possible, I think there is potential, certainly bipartisan support for making some changes to negative gearing or super tax concessions. So I'll go with negative gearing and say that if we could at least couple that with capital gains concession changes, then we'll be helping a lot of people in this country, particularly those who are homeless, and there's far too many of them, and also young low-income people who are looking to own their own home.
And we'll end on that note, ladies and gentlemen.